Phillip Morris International.
Sorry.
What? Oh,
No,
hot.
no,
Are you hot?
I'm not going hot. No,
You're not
no.
hot either?
No, not on this one. No, a little bit expensive.
Oh, that was quite an aggressive. Sorry. You mean I left? Oh, sorry. I left out Gary. All right. Phillip Morris International was spun off from Altria in 2008 and sells tobacco products outside of the US.
Fascinating move. So what they realized is that the combined entity wasn't getting the market rating it deserved, and so they split it apart. This one has got a 26 price to earnings ratio, as you're about to read.
Market cap there, $182.4 billion. PE ratio actually of 26. You said 26.
Yeah.
I thought I heard 27.
But look at that. So the market cap, 182, is higher than Altria, which was 138 or something.
Dividend yield here of 3.5%. So we're still in good dividend yield space by US standards.
Yeah, absolutely. Yeah, and you're going to see all of them have very good dividend yields. I think Phillip Morris actually pays out, I think it's just about the majority of the earnings as dividends, which is, yeah, I take Paul's point that you kind of want something that's growing sales aggressively, but when your sales are sort of declining, but you're still managing to push through price increases and, you know, your margin is actually expanding as well as you bring down costs, you know, it's you can afford to pay out a lot of dividends because you're not in a growth industry. You're not really investing. You know, there's not a lot of capex. Your factories are built. It's yeah, it can be interesting, and that's why the dividends are always going to be good on this. But
it's regulation that really can play with this industry.
You know, with Phillip Morris, as Paul's saying, what's really affected, I suppose, their earnings recently is also the fact that they are majority outside the US, but they report in dollars as well. So what's happened is, you know, with this, you know, now recently you sort of expected with a weakening dollar, you're actually going to see a little bit of a boost to the earnings, but with the stronger dollar, it certainly affected the headline numbers of the company.
Let's have a look at the chart, because that will reveal all. So it is moving higher, that's for sure. Now, what does one say?
Pains
Look,
you to see that, doesn't it?
a global move here, it's sort of linked to the whole issue of healthcare, because when governments are the ones that have to pick up the tab for all the heart disease and the cancer that's related to the product, how do they recover that? They recover that through higher and higher excise taxes and sin taxes, really, on cigarettes. But it doesn't seem yet that they've reached the point where the customers are smoking less.
Well,
They're
that's
just
what Gary
sucking
said.
it up.
It's that relationship. They have an addictive relationship with the clients, have an addictive relationship with the product.
Yeah, I think, I mean, but you are seeing people smoking less. I mean, the health trends are coming through. So, I mean, if you look at the US, you know, maybe not in the context of Phillip Morris, but I think in 1965, I think it was 43% of adult Americans, you know, had smoked recently, whereas now it's only about 18%. So it's definitely a declining trend. People are conscious of it, but as Paul said, that's very much the developed world. Developing world, a very different story. But even then, I think you're right on the regulations, because, you know, Phillip Morris actually was affected in India recently as well, where the sort of the Ministry of sort of you know, health came out and said, you know, you're marketing too aggressively. They were kind of handing out cigarettes for free in clubs. You know, it's like dealing drugs. You're trying to get them hooked, you know, and also the way that they were advertising in sort of stores. And they you know, there's kind of the potential of a hefty fine for Phillip Morris as well. So it's. Yeah, it is. Regulation is always going to be tough, and it sort of leaves that little bit of uncertainty around the stocks.
But talking about emerging markets, talk to me about China. I mean, you've done so much on-the-ground analysis in China. What about the smoking
Well,
trends
that's interesting that you raised that, because China has, for various reasons, historically had its own Chinese-owned and state-owned cigarette production companies. So this is like a super premium type of product, which has typically not been allowed to get in and or has only been available in sort of Western stores.
What if it could get in?
So the Chinese market has been sort of closed. To date, there's been no move by the Chinese government to allow the foreign players to take stakes in Chinese companies. It's kind of been centralized and held. I don't know why. Knowing the Chinese, they'll probably announce next year that smoking's been banned. And 1.3 billion people will go from hero to zero. It'll be a national crisis.
Hot or not on Phillip Morris?
No, also I'm not going to go. Just also looking at their numbers, they only really managed to grow slightly in Canada and Latin America. The rest of their territories are under pressure. So
Paul, do I need to? Should I just skip you for the rest of the conversation?
I think this one is not hot.